Hey, this is Mark again with Blue Water. Thanks for joining us. I'm going to talk with you here real briefly about the very common question that a lot of employers have. When I give an insurance carrier $1 of my money for my medical plan, my group medical plan, where does my money go? We'll talk about fully insured. We'll also talk about self-insured. This is actually a pie chart that breaks up. Now, this is going to span, it's going to be different a little bit from state to state and from vendor to vendor, but this is basically what you're looking at when you're talking about where your money goes. First of all, the tax, you're going to look at somewhere between 1% and 2% of your overall premiums going to the State Department of Insurance to pay as a tax. The second part is a commission, which generally ranges depending upon the size of your company, and that's designed to be able to cover the cost that your benefit advisor has. The main thing as a company to make sure of is, are you getting adequate value for the amount of money that you're spending in regard to those commissions, which on your size, it may range. You'll normally see on groups that are below 100 to 150, somewhere between 4 and 5%, depending upon the state and the insurance carrier. And the larger you get, because of scalability, it trickles back down from there. Then you have the largest two parts, which are the claims and the insurance carrier. Now, the insurance carrier, this part pays for everything that the insurance carrier does. It pays for them to process your claims, to build networks, any internal costs that they have for disease management, things of that sort. On a fully insured basis, it also pays for the pooling of your claims, which is actually too in-depth for this video, but there are certain risk charges for very large shock claims on your group that's spread out among multiple employers, and that's charged off into this. Some of this is actually claims as well. But then you get to the big part, which is your overall medical and pharmacy claims, which you're going to find is somewhere between 70 and 75% on average for employers that have less than 100 to 150 employees, sometimes even 200 employees. That'll be the target. So the major question that I always have when I begin talking from a consulting standpoint with my clients is, if you want to control healthcare costs, what do you focus on? Do you focus on tax and commissions? No, these are after the fact. These are percentages that are determined based upon the total value after the fact, after your claims and your insurance carrier portion and cost have already been determined. Insurance carrier, you can certainly shop your insurance carriers, and that's important, but ultimately the long-term success of your plan is going to be whether or not you can control healthcare claims. Now, insurance carrier selection becomes really important because you got to make sure that you have good discounts. The other question that often comes up is, should the insurance carrier pay for these claims, or should I pay for these claims? Should I consider different ways to fund? Now, don't go running for the hills because you immediately think of self-insurance. There's a lot of different ways to fund it, but as an employer, what you do is this probably reminds you of statistics class. There are certain statistical probabilities that work with your plan, and it's referred to as the law of large numbers. So as your claims begin to get more statistically viable or predictable based upon a normal distribution curve, what happens is as the larger your group gets, the more experience you have, your claims pattern begins to mimic this normal curve distribution. And then you'll see whether or not you're falling 1 or 2 standard deviations away from predictable. What does all that jargon mean? It means you can predict it. So if you can predict it, does it make sense to pay an insurance carrier quite as much to predict what you can predict? So you'll see some employers begin to push into this insurance carrier portion that they pay them by funding in different ways. And all that really does is frees money up for their claims. But ultimately, it's your claims that determine your overall cost. And your claims are going to be your claims regardless of insurance carrier, with the one exception, of course, of network discounts. So I hope that's been helpful to understand the basics of where your money goes. And if you get anything out of this, the main walkaway point is, what should you focus on as far as an organization goes if you want to control your healthcare costs? And the obvious answer to that is your claims. The healthier population, the lower your claims, the lower your cost.